My beautiful friends, how are you doing? Let's learn how to trade futures on the Bybit platform. What you're going to learn in this video will be enough for you to start trading. And of course, not just in this video, because this is going to be a series of videos. If you are someone who wants to learn how to trade futures from the beginner level to the advanced level, well, this tutorial or this course is going to be very beneficial for you. Okay, we're going to look at beginner concepts, and we're also going to dive into the technical aspects of trading, like technical analysis. All right, so if you're a beginner trader, this video is for you. If you are an advanced or an intermediate trader, you might also find this video useful. I've made videos on this before, but this one is a course. Okay, it is targeted at helping newbies step by step to master the concepts. So let's dive right into this. So to get started, you would need an account on the Bybit platform. To sign up for an account, please use the referral link in the description of this video to sign up for an account. And of course, you will need to do KYC to have your account ready for trading. All right, and after that, you can fund your account. All right, how to fund your account. If you want to learn how to fund your account, I'm also going to leave videos in the description that's going to show you how you can buy crypto on the Bybit platform and have your account funded. Okay, so after watching those videos and you have funded your account and you are ready to trade, the next thing will be to go to the trade section. Just click on that button right there, and that's going to bring you here. All right, so this is the trading platform. All right, so make sure you select this. All right, if I click on that, that's going to take me to the spot section of this. We want to trade futures, so click on futures. So this is where you would want to be. All right, so what are we going to be looking at now? As a beginner, I know all of these things here might look confusing. All right, but let's get started. So this right here is the contract we are trading. All right, so if I click on this, you can see other things you can trade. You can see all these ones. You can select any of them. All right, and if you don't want to trade these are perpetual contracts. You can select futures. All right, you can trade any of them. So I'm going to go back to perpetual. So this right here is the trade section. If I click on the chart section, that's going to show me the chart of the asset I am trading. This is Kaito USDT, and you can see the trading price. You can see the chart. These are candlesticks. These candlesticks represent what buyers and sellers are doing in the market. The red candles are used to represent the selling action in the market, while the green candles are used to represent the buying actions in the market. All right, you can see we have a bunch of them right here. Before you can take a trade, you need to understand all of these things right here. All right, there are a lot of things you need to learn about this. You need to learn how to analyze these candlesticks, understand the patterns that are forming, use necessary profitable strategies before you can go into trading any asset. Later on in this course, we are going to look at technical analysis, which is the aspect of futures trading that helps you understand these things here. Right, so let's get back to the trade section. So we click on trade. Now we can see that we have cross here and we have 10x here. All right, and we have market, we have all these things here. Now before you can start trading, you need to fund your trading account. All right, you can see I've got $50 here. So if I want to fund this account, all I need to do is to click on the plus button, and that's going to bring me here. Then I'm going to click on transfer. That's going to bring me here, and all I would need to do would be to select this USDT. Of course, if USDT is not here, you would have to click on this, and it's going to bring you to this place. You would have to look for USDT here, select it, and it's going to show here, and then you're gonna click on max or type in the amount of USDT you want to use depending on how much USDT you have in your account. And make sure that up here we have funding and down here we have unified. If this is not the situation, you can click on this thing in the middle and it's going to kind of switch their positions. All right, this is not how you want it to look. I'm gonna click on it again. All right, you have funding up here and unified down, so that's how to do it. And then you click on confirm. All right, the amount of money you want to trade with is going to be transferred to your account. So now I've got a trade that is going on, and I'm going to just walk you through what is going on here so that you understand it. And then after that, I'm going to close the trade and then walk you through how you can start a trade or open a trade. Now you can see I've got a trade that is going on right here, okay, and the trade is in profit. I'm up by 4.95%. okay, so what is really going on here? So let's see. I am on a cross mode. What does this mean? What this means is that my available balance, which is the money I've got in here, all right, is risked in this trade. If this trade goes against me, what is going to happen is that I'm going to lose all of this money. I will say that again. If this trade goes against me, I'm going to lose all of this money right here. That is what cross means, cross mode. If I click on that, you can see we've got another one, isolated. All right, so you can use isolated if you want to, but what it means to use isolated is that if the trade is on, you are not gonna lose all the money you've got here. The only money you're gonna lose will be the money you put into the trade. So once the trade goes against you, whatever money you put into that particular trade, that is the money you're gonna lose. You're not gonna lose the money here. So, but for cross, which is the mode I am using now, once this trade goes against me, I am gonna lose all of this money. All right, so sometimes beginners are advised not to use cross except they have understood risk management. If you do not understand risk management, do not use cross. In fact, even isolated, do not use it, because if you do not understand risk management, you might blow your account. Later on in this course, we are going to look at how you can use cross and still reduce the risk of losing the money in here, or even decrease the risk to almost zero. All right, it is possible. Professional traders do this, or advanced traders do this a lot. I'm going to be showing you all of that in this course. And as you can see, I'm using a 10x leverage. I'm going to talk more about this when we get to the mathematical aspect of this course. Okay, so what is really going on down here? Okay, you can see I've got a position size of 14. What does this mean? This position size means that when I enter this trade, I was able to buy 14 units of this token, right? 40 units of Kaito at this price. So when I entered the trade, this was the price. This right here is what we call the market price. But when I entered the trade, this was the price. All right, and this is market price. All right, this is fluctuating. You can see this fluctuating. This is the market price. This is the market price. Now the next thing here is this 5.2608. That's my estimated liquidation price. All right, so what does this mean? What it means is, first I shorted this market. All right, so that's why my liquidation price is 5.2609. And what does it mean to short? What it means is that I am predicting that this price is gonna go lower. All right, and remember, you don't just predict, you predict after you have done technical analysis. And remember, I told you technical analysis is you looking at the chart and using your knowledge of the charts to predict. And then of course you can also predict from fundamental analysis. There are a lot of things to look into before you can make any predictions, right? So I made my prediction that this price is going to drop, and that was why I shorted. So I'm going to show you how to short and how to long. Don't worry, just keep watching. So I shorted. So I am going to lose this trade if this price, instead of going down as I predicted, if this price goes up to this, that's when I'm going to lose this trade. And it's going to really be difficult for this. Not impossible though, but it's going to be really difficult for this to jump to 5.2609, and I'm going to explain why later on in this video. Okay, so as I said, this is my profit. I am at a profit of 4.01%, and this right here means 0.09 USDT. That's what I am making, ladies and gentlemen. So what I'm going to do now is I am going to close this trade and move on to the next stage of this course, and this is where we're going to start showing you some important calculations, mathematical calculations, very basic calculations you should know before you get started with opening any positions. So let me close. How do you close a trade? So I'm going to click on close by. All right, I can just click on confirm. There are even better ways of closing a trade, but I'm going to show you that later on as we proceed. So I've closed the trade. Now you can see, ladies and gentlemen, the available balance now is 50.0075 USDT. It was about 47 before, but as I closed the trade, my profit was added, and I now have this. So how do we get started? So I want to open a short position. I am predicting that this is gonna drop. So to do that, I'm gonna click on this right here. All right, you can see it shows market. If I click on it, it shows me limit. So if I click on limit, so I would have to key in the price that I want to enter this trade. So what does that mean? What it means is that if I come back here on the chart, all right, so let me show you something. If I come back here on the chart, all right, I want to enter a short position again, meaning that I want to predict that the price is going to keep dropping. But you don't just jump into the market, you enter the market from what the chart is telling you. All right, so let's say I know that, or I'm predicting that the price is going to rise when it gets to this level, 1.8057. it will start dropping. All right, so around this price range of 1.8057. all right, then what I'm going to do is I'll key in 1.8057, 1.8057. all right, and that's it. You can see, so that's what it means to enter with a limit order. That means you are entering from a specific price that you have a reason for. All right, you don't just key in any price. Remember, the price you are keying in here must be because of the information you have from the chart. And just as I showed you, predicting, let's say I'm predicting that when these candles get to this level, that the price is going to be rejected and it will start falling. So then I would have to enter from that. So that's what it means to key in this right here. If I were to long, it is the same thing. So now what I'm going to do now is I'm going to select the mode, right, that I want to use. I want to use the cross. So I already explained to you the implication of using cross before. So then the next will be to select your required or desired leverage. In this case, I'm using the 10x leverage. Now the next thing will be to decide the amount of money you want to put in here. Where we have order value, you would need to decide the amount of money you want to put into the trade. So because you have $50 or $100 or $10 or $1 does not mean you must use all of them. All right, so you must know what percentage of your available balance, all right, the money in your account, your available balance, you must know what percentage of it you are going into a trade with. Don't just say, okay, because I have $10, let me just put $10 here. No, that's not how we do it. You must know what percentage of it you want to go into the trade with. So let me show you something. So let's say I want to go into this trade with 5% of this. All right, 5% of this, 50.0075. So what does that mean? So what I'm going to do is I'm going to go to my calculator. 5% times 50.0075. All right, so this right here means 5%. That's how to do it. So that gives me 2.5. So you can see what it gives me equals to this. So to use 5% of $50 means that I am using 2.5. So 2.5 is my margin. Again, 2.5 is my margin. What is margin? Margin is the amount of money from your available balance that you want to enter a trade with. All right, that's your margin. All right, but because I'm using a leverage of 10x, I'm not going to put 2.5 here. If I put 2.5 here, that means I do not understand that I am using a leverage. So 10 is going to multiply that 2.5. So this times 10. Remember, 10 is my leverage times 10. That is going to give me 25.00375. So this is my position size. So my position size is 25. What does position size mean? Position size is your margin multiplied by your leverage. Again, margin multiplied by your leverage. So let me put 25 here. So this right here is my position size. What is position size? Position size is leverage, whatever leverage you have applied, multiplied by the margin. Remember how we got the margin? We got the margin by doing 5% of this. So I could have done 10%, I could have done 20%, I could have done 50%, but to be on the safer side, all right, because we're on the cross mode, always use smaller percentages of your account. If I click on that 10, I could select 25, for example. If I select 25, all right, what it means is that I would have to remove this, all right, and my position size will now be 25 times my margin. Remember, my margin was 2.5. all right, so I would have to do 25 times 2.5, and then I'll put that value here. So basically what I'm saying, I'm going to put it right back to 10. So basically what I'm saying is what you are going to put in here, all right, this place we're going to put here is going to be your margin multiplied by 10. You have 50 here. Let's say you want to use just 10 from here. That means you're going to do 10 times 10. So that means you put 100 USDT. So out of this 50, let's say you want to use 20 USDT to enter this trade. So that means you put 200 here. So that means the 20 you want to use from here multiplied by this 10 to give you 200 USDT. I hope this is clear. If you do not understand, just go back again and watch it. So now this is my position size. Position size again is what? Position size is your margin multiplied by the leverage you used. So this is my position size, and what I'm going to do now is I'm going to click on short. So if I click on short, this trade will be queued. So it shows me details about the trade, and then I'm going to click on confirm. So watch. Now this trade has been opened. I want you to notice that position says 0. You can't see anything here, but if you can look closely, you can see I've got an order of 1. If I click on that, it shows you the trade. Why is this trade not activated? Well, the answer is because I used a limit order. All right, I didn't enter the trade immediately. I am predicting that price is gonna get to this place and then starts falling. So because the trade has not been triggered, all right, it is going to look like this. So what I'm going to do now is I'm going to go back to this and try to enter this trade, all right, using the market price. So for the purpose of this video, instead of using limit now, I'm going to cancel the limit and go to market, all right, and then we're gonna do this again. All right, so I'm on cross mode. Never enter a trade if you don't know the mode you're using. I'm on cross mode, and 10x leverage is applied. I want to use 5% of my account. Remember, 5% of my account is 2.5. 5% of this is 2.5. So 2.5 is my margin. All right, so that 2.5 multiplied by 10x, all right, that's 25. So that means I'm going to put 25 here. So there's this thing that Bybit normally does. If you put an amount, if you put a position size, remember this is my position size. Whatever you put in here is a position size. If you put a position size that is not from $5 and above, they might not allow you, not even might not, you will not be allowed to open the trade. So you must always do your calculation and make sure that you put a position size that is above 5 USDT. If you do not, something will be displayed on the screen telling you that you are required to use a notional value of 5 USDT and above before you can open the trade. What that means is simply that your position size should be from 5 USDT and above. Okay, so I'm gonna click on short. All right, click on confirm. Now you can see from orders, I'm gonna go to position so I can see the trade. You can see the trade is running. Now I want you to see what's going on here. All right, my position size says 14. So which one is this? How is this position size and this one is also position size? Well, this right here on the Bybit platform is telling me the quantity of Kaito I was able to buy with 25 US dollars, with a position size of 25 US dollars. All right, of course, I hope you know what entry price is, the price you entered the market. Now let's look at risk management. Very, very important. So when you use 5% of your account balance with a 10x leverage, you are going to lose the trade when this right here gets to negative 2,000 approximately. So this is how advanced traders use cross margin, all right, to manage risk. Negative 2,000, approximately negative 2,000, all right, maybe around 1,900 and something, right, because of maintenance margin fees, funding rate. All right, I'm going to talk about this funding rate later, all right, and other fees. So it should be around that, and you can see it is at 0.93%. So can you see that it's gonna really take a long time for me to be liquidated? It is not actually impossible. When market makers enter the market, they can manipulate this right here to push this to run to close to negative 2,000 for me to be liquidated. And that means that this right here will be very close to this, or this exactly, because this is my liquidation price. When the market price gets to this, I'm going to get what is called a margin call. They will send it to your email, and that email will tell you specifically to add more margin, like put in more money here, all right, to avoid losing your position. Your position is like this open trade. Now you can see I am losing, and I am down by minus 3.02%, and this right here means that I'm losing negative 0.07. This is the actual USDT that I'm losing from the money I have here. Okay, so you probably might have heard some traders say that they can open a futures trade and not use stop loss. Well, the reason is because of exactly what I'm telling you. They know where their loss percentage is. They know where their liquidation price is. So they know where this is going to get to for them to get liquidated. All right. So I can open a trade. You can see I've not talked about stop loss, and I don't have any stop loss for this trade. Right. So when I enter trades, I don't use stop loss. All right. When I'm using this risk management strategy. All right, because I know this has to get to negative 2,000 approximately for me to be kicked out of this trade. In fact, if I ever want to make it safer, I can also, instead of using 5% of my account, remember it was $50 initially. Instead of using 5% of that, I can use 2.5% of that. So if I use 2.5% of that on a 10x with a 10x leverage, this is no longer going to be at this. All right, this is going to increase. Remember, I'm shorting, so it is going to be way more difficult for me to be manipulated out of this trade. All right, but when you open trades using this strategy, you don't open them and start sleeping. Of course, you need to be watching your trades, all right, and know where the your percentage is at every given time. All right, if it is approaching your percentage, there are a few things you can do. Right, you can add more margin and you can average in. As we progress in this video, I'm going to show you how you can do all of this, how you can average in, and how you can add more margin to reduce the risk of being liquidated. Okay, so but now let me show you something really important. So there's a calculator up here. I'm gonna put in these details here. Remember, our entry price is 1.7066 and we're using a 10x leverage. So select this calculator. So I'm shorting, so I'm gonna click on short. Remember, I was shorting. My leverage is 10. The leverage applied on this trade is 10. I entered this trade at 1.7066, so I'm gonna put it in there, 1.7066. That was when I entered the trade, ladies and gentlemen. And quantity is how many did I get? The quantity was 14. How many units of Kaito was I able to get? So the close price, my liquidation price is 5.2657. So this is what I'm going to key into that calculator. You know why I want to do this? I want to show you again that when you use 5% of your account balance on a 10x leverage, that it is going to take approximately negative 2,000% for you to be out of the trade. So back here, you can see now that after keying in those details, all right, my calculator is telling me that my ROI percentage is going to be negative 2,000%. So approximately. I hope you understand what is going on here. What is going on here basically is that I'm going to blow my account when the ROI gets to this right here. So when you use 5% of your account with a 10x leverage, this is going to be the required ROI for you to be taken out of the market. Remember how I calculated it? All right, pretty simple. I keyed in the quantity on my position size and quantity, all right, of Kaito in here. The liquidation price that was given to me, I keyed it in here, all right, and then the entry price, I keyed it in here, and then I clicked on calculate, and the calculator did its job for me. So this is how you can use this calculator to know what is going on. Really important calculation you need to know. Many people do not know this. All they know is open and close. You need to have a good understanding of this so you do not run into problems, so you don't blow your account. All right, so my loss, this P and L means profit and loss. So because I'm shorting and I'm considering a scenario where I blow my account, so I will be losing 49.7868. Remember, my account balance before I started the trade was $50. So 49.7868. That's what I'm gonna be losing. So you can use this strategy to figure out what it's gonna take for you to blow your account. All right, whatever is the liquidation price, you can key it in there to figure out what is going on. Now let's look at some of our important things. Okay, so first I want you to notice the funding rate here. It is positive. What this means is that you have a slight advantage. Okay, what it means is you'll be receiving funding from those who longed this trade. Okay, and when it's negative, what it means is that you are going to be paying the funding fee to those who are long in the trade. So that's how that works. Okay, and as you can see right here, there is a timer counting down. All right, once this counts down to 0, it is going to start counting down again. This right here is charged at intervals. Okay, for some exchanges it is mostly 8 hours. All right, so you receive funding or pay funding within this interval. Now there is another important calculation here that you also need to understand. Now I want you to see that at the time, this is actually a screenshot. You can see everything is frozen. So look at this, negative 4.19%. This means 0.10 USDT. Okay, that's what it means. It means I'm losing 0.10 USDT from my account balance. Now how do we do this calculation? Well, all you need to do is do 4.19% of your position size. Your position size is 25 USDT. All right, so I'm going to do 4.19% of my position size. 4.19, all right, percent means divided by 100. All right, so this is what it means, 0.0419. So 4.19% multiplies my position size. Remember, my position size is 25. That's going to give me this. All right, so if I divide this by the applied margin, that is going to give me 0.1. So this is why I am losing 0.1. And still under this risk management, another thing to understand is that if, say, I opened a trade with 5% of my account, of course that's the situation we have here. Open a trade with 5% of my account and with a 10x leverage, all right, and let's say you decide to open a trade with 5% of your account, but instead of using a 10x leverage as I've used, you decide to use a 20x leverage. The implication of that is that when mine right here is reading say 1,000, all right, yours will be reading 2,000. That means the higher your leverage, the faster you approach your liquidation P&L. The 20x is going to get you faster to your liquidation price or liquidation loss percentage right here. All right, so that is why it is not really advisable to use higher leverage, except you understand how to manage it. If you're going to use a higher leverage, make sure you're using a very small fraction of your account, maybe 0.5% or even 0.05%, depending on your account size. Okay, so traders who have a lot of money in their account, who trade with hundreds of thousands of dollars or even millions of dollars, they sometimes use a 2x leverage or 1.5x leverage with a very small percentage of the account balance. All right, so leverage pushes you faster to your profit. It also pushes you faster to your loss. And if you're wondering what leverage is, I'm pretty sure from what we've been doing since you understand what it really is. Because when I was explaining position size, I told you that my margin, right, I used 5% of my $50 here, which gives me 5% of it is 2.5. Yeah, so my margin is 2.5. all right, but notice, because I applied a 10x leverage, that means I now have $25. All right, okay, so that's what leverage does. Leverage multiplies your margin. Okay, it boosts your buying power. All right, but the more it boosts your buying power, the more profit you can make from the market. But it also means that it is also amplifying your risk in the market, your losses in the market, if the trade goes against you. This is where we're going to draw the curtains for this video. All right, I want you to watch. I remember this is a course, and in our next video we're going to dive into technical analysis. All right, we're going to look at all the things you need to know to be able to read the charts and then come right here and take a trade, just as I've shown you in this video. We're going to look at candlesticks, we're going to look at candlestick patterns, we're going to look at the psychology behind candlestick patterns, we're going to look at trading strategies, a lot of them out there, right? And then I'm going to show you my personal strategies that I use, right, that work for me in the market. So it is going to be from beginner to intermediate to advanced. So if you're interested, keep an eye on our YouTube channel and on our social media handles. Okay, so don't forget to like, subscribe, share this video with your friends. If you've got any questions, let's share in the comment section. And then of course, don't forget to follow us on our Twitter handle, our YouTube channel, and join my Telegram group. Okay, that's where you're going to be getting inside information, okay, with regards to the trades I'm taking and some of our important things. So see you in my next video.